Hello, everyone, and welcome to episode 9 of the New Trader's Playbook. This episode is titled Creating a Strong Daily Trading Routine. So, we have been talking a lot recently about your psychology and the need to see the market in the right way. But one of the things that could be missing from your trading journey is having a strong daily routine. So, we're going to talk about what that looks like and how we can create it today. If your routine is random, your results will be random. Creating a daily routine you can stick to is the first step to stopping you from allowing your impulses to ruin your results. So we want to have a routine that we can stick to, which means it's easy enough, it has rules, and it's something that is essential because we do not want our impulses to ruin the results that are ours. We want to gain those, so let's find out what kind of routine can help you to see a lot of progress in the market. So let's start off with what happens in the pre-market time. So the first question is, when does your trading actually start? It does not start when you click the button first. It starts well before that. Sometimes it even starts before you sit down in front of your computer or your phone or whatever you're trading in front of. It is necessary that we have a plan for how we're going to go into the market, how we're going to beat the idea of reactively clicking buttons. We're going to be calm. We're going to remember that preparation is what helps you to fight those natural impulses. Just like we talked about in the last episode, trading is not natural, right? It's not, but we want to be able to fight those impulses so that we can have less stress and we can have more confidence when we are in the market. We need a script and we need to follow it. So we're going to need to prepare for a calm, impulse-free trading day. Right? I'm going to tell you from experience, you guys, I know myself and many other traders have been in a situation where we jumped in front of the charts, we saw something that we liked, and we immediately pushed a button. We have not done one bit of preparation. We haven't looked at anything that happened. We haven't looked left. Remember the importance of looking left. Those are the times when you just snowball into problems. We do not want to start our day that way because randomly starting your day will end up with random results and they will never be good. So what does it look like? How do we prepare before the market opens? Okay, so we're going to look at 3 basic steps and then we'll jump into the charts on each one of these just to kind of talk very quickly about what that looks like. So step number 1 is we want to check the higher time frame, see what the trends are, see those key support and resistance areas. Okay, so if we notice here, we're on a lower time frame. So at the beginning of the week, not just the beginning of the day, but at the beginning of the week, you may want to do some kind of review where you're looking at a monthly chart, especially depending on when in the month, maybe it's close to the new month. You're looking at a weekly chart, right, to see what has happened. Where have we been? Where are the swings, right? Because remember, a lot of those support and resistance levels are going to be within our wick zones, right? So we're going to want to know where these areas are. That's going to be super important. But this may be something you do at the beginning of the week, your month and week. What we do want to do every single day is check out what happened yesterday and what does it look like. So this is a daily chart. You can obviously tell that we have been for quite a few days in an uptrend right here. But you'll notice that we've been stalled out for a few days and now today we're pulling back a little bit. This is just giving you a general idea of what is the major trend and what might be happening today. That doesn't mean that you necessarily have to trade the major trend, but you do need to know what the market is doing on a high time frame. After we get done with the daily, we may want to go down to the 4-hour, check and see what's happened down here. Look at those wick zones, right? We can notice what's happened in these wick zones. Where is price being held? What's being respected? What is being disrespected? What areas should we focus on? Remember, I'm always going to talk about these wick zones as being super important. They really do often create your support and resistance levels in addition to old highs and old lows. You know, we're looking at that area right there. We got really close to it today, as you can see here. These are just some things that you want to keep on your radar in the form of higher time frames, right? So with the second one, we'll say, look at what happened overnight or since you last looked at price. So let's say you wake up in the morning, you're like, all right, it's a new day. I'm going to check the markets and see what happened. So the first one we're going to want is what happened. Let's see, we'll go down to a smaller time frame. What happened overnight? Why do we care about that? Because oftentimes the high of the overnight session and the low of the overnight session, when we sweep those edges, price likes to reverse. Not always, but sometimes. So the best way, if you're on TradingView, you can go to your settings, you can go to events and find the session breaks. That'll be the easiest way to know. This will show you each individual day. So that is when the market opened for this product. So let's say I want to mark out the high of the session and the low of the session. As you can see, currently, we have not broken the high or the low that happened overnight. That's good information. If we break the low, we break the high, we want to know because we definitely don't want to be trading against a solid reversal location, or at least knowing where things are. Know what happened overnight. In addition to that, one of the really important things is knowing what happened yesterday, right? So you're going to want the high and the low and the mid of yesterday. Thankfully, I have a nice prior day open, high, low, mid, close. All of that can be found on my website. But you'll notice here that it gives me an easy to see high, mid, and low of yesterday. Now remember, I love to talk about this all the time. One of the very, very common moves that price makes, does not matter what you are trading, price loves to open, break one side, in this case it broke the low, and make its way right back to the mid, and then oftentimes make its way right back to the low. This structure happens all the time. If you don't believe me, go ahead and check whatever your favorite instrument is, check your favorite charts. It doesn't matter, you're gonna see this move open, cross one of the low or the high, so it could definitely look like this, cross the high, make it back to the mid, come back to the high. You will see this all the time. Focus on this. It's a really, really good opportunity, huge opportunity right there for taking reversal trades, okay? You need to know where these locations are in order to set yourself up. The last thing you want to do is be trading against a level that often offers reversals, just like this. We don't want to be trading against a level that often offers a reversal, because what if we're going the opposite direction, right? The more knowledge you have, the more power you have in the market, okay? And step number 3, look for news, earnings, events. If you have TradingView, just come over here to the side. You'll see there is a little calendar here, and the calendar will show you the day. I have it set to only the high importance news events, and you'll see that today is December 11th. We do not have any scheduled reports, so there's nothing to worry about. If there is a scheduled report, you need to be really careful, and you do not want to trade right around that time. So for example, you'll see here, this was at 1400, 2 o'clock yesterday. This is not a time to be in a trade, because the market will be doing a lot of swinging back and forth, and we do not want to be in the way of price deciding on what it does. That will keep you from losing your money unnecessarily. So we check the higher time frame, we look for what happened overnight or yesterday, and we look at news. This is how we prepare ourselves for our trading day. Now, it's time to trade. We've done the pre-session things, we're ready to get started. Our daily routine needs to come with some rules. If you are a beginner, I truly believe that all beginners need to have rules for the session that they plan to trade. Whenever you plan to trade, you've got to have some things in mind. For example, rule number 1, a max number of trades per day. The reason I put this on there is because I promise you at some point in time, you are going to start clicking buttons, taking trades unnecessarily. It's called over trading. If you don't have a maximum number of trades to rein you in while you're trading, you will find that all of a sudden you've traded way too many times and you've either blown a lot of money, blown accounts. It is very easy for that impulse to take you over, because that's natural, all right? This rule can help you stop that. Same thing with the max daily loss limit. Right? Just like I mentioned in the last episode, if you remember our equity curve, if you remember this chart, that it has controlled losses. The reason why this person's chart, the blue one, looks like this is because they have a max loss limit for the day. If you do not, your trades could easily start looking like this, okay? Keep that in mind. Next rule, no adding to losers. This is what most people call DCA, dollar cost average. When you are a beginner, please stay away from dollar cost averaging. Stay away from price going down against you. We talked about this in the last episode, adding, and then it goes farther, adding, and it goes farther, moving your stop loss. When you get to become more advanced in trading, you may create a strategy, a setup that has that as a part of its rules. If that is true, okay, fantastic. But just don't add because you're afraid to lose. Right? Remember, as we said in last episode, the best loser wins. And finally, no trading outside of your chosen setups. Decide on a setup, pick what you like, pick what resonates with you, and stop changing it. Remember, consistency is your key. That's what makes you a good trader, is your ability to be consistent. If you change it all the time, you can't trust it. If you have a strategy that you've tested hundreds of times, stick with it. Let it show you whether or not it is successful. No trading outside of your setup. I do want to show you a couple of things. These are what are called demon finders. It's very interesting. And essentially what a demon finder is it is just something that you can use while you're trading to stop you from making terrible decisions. As you see here, it says demons will destroy your edge. So learn from your errors is the only way to achieve success. Kill the demons before they kill your success. So what this looks like is just a basic chart that if you were trading and you found that you had a bad risk reward, you took a bad trade that had a smaller risk than it had a potential to gain a reward, then you would check mark that. Maybe you had a bad entry, so you were late to enter. You were chasing, really. You check that one. You were early to exit. You preemptively exited. You check that. You'll notice how here it says if you do one of these 3 times, you don't get to trade for another day. This is really useful. This is really useful to keep you in line because you want to trade. You love the market, but if you break too many of your rules, you don't get to. 4, 5, 6. Oh, now you don't get to trade for 3 days. 7, 8, 9. Now you don't get to trade for 5 days. These are the kinds of things that create consistent rule followers. So I like this visual right here. Same concept, just a little bit different, where if you trade 8 times in one of these, you stop trading. I like the other one a little bit better, but it has some rules on this one. So feel free to take a screenshot if you like this. These are things you can find easily on the internet, on Google. But I think it's really important that we stop thinking we know what's happening and we start putting it on paper to see what are our demons? What are we doing too much of? What is destroying your trading? What's destroying your edge? And once you know that, you can fix it. And then you can become a much better trader. So why do we care about rules? Because rules are pre-committed decisions. That means we've already decided, we've already made the decision. They are pre-committed decisions that you make with a clear mind. We make the best decisions here so that you don't have to negotiate with your fear, your FOMO, right in the middle of a trade. I promise you, making a decision in the middle of a trade, that's not the time. Make it before, pre-commit to your decisions and stick to them. The best traders in the world are the people who are able to follow their rules. Those are the ones who are making money. Okay, so we did it. We finished the day. Yay! So now that the trading day is over, what happens? You just turn the computer off and walk away? No, it doesn't work that way. At this point, now we need to go through our post-market review and, of course, journaling. Right? So step number 1 here is we want to review and log all of our trades. If you have a program that allows you to do that, great. If you don't, then you'll have to do it manually. You can do it on your computer, do it in Excel. You can find some free programs to do that, but you need to be able to take note of all of your trades. Review them, log them. I've got them on paper. I've got them on the computer. The next one is to take screenshots for later. I promise you guys, you're going to forget stuff about your trades. We don't want to forget things about our trades because a month, 2 months, 3 months from now, we want to be able to have this amazing set of information that will help us to become a better trader. The more information you have about your trading history, the better trader you will become. It's so much easier to remember things when you see a picture of them. So grab a screenshot, attach that to your trade log information, and also identify what your emotions are. Okay? Because emotions are really important. You might find in your emotions that certain things trigger you. Certain things trigger you to click the button too many times. Certain things trigger your fear, right? That emotion. You may be interested, so feel free to grab that. It's just got some things that you may be able to put into your trading journal. You can, of course, adjust this however you feel, but just some things you might want: the date, the session, the instrument, which means what you traded, the time frame. Oh, I traded on the 5-minute. I traded on the 60-minute. What was your setup? What was your plan? Where'd you enter? Stop, target. How much did you risk? Why did you take this trade? Was there a reason? Was it just followed your rules, or did you feel some kind of way? Give them some execution notes. This one's important. Did I follow my rules? Yes or no? Why? Okay. What were my emotions before I took the trade, during the trade, after the trade? What were my results in R? Okay, so R is how much you risk. So if, let's say every single trade I risk $100, that's my R. And the reason why I really like this one is because if you put your results in R and not in dollars, you're going to find something really cool. You're going to see that instead of just saying, oh, today I made $1,000. Remember, we've talked about the fact that we don't want everything to be about the money. We want it to be about the process. But if I say I made $1,000 today, well, how much did you risk in order to make that $1,000? Because if I say I risked $1,000 to make $1,000, that's not nearly as interesting. That's not nearly as successful as I risked 100 to make 1,000. You see? So if I risked 100 to make 1,000, then my results for the day would be 10R. If I risked 1,000 to make 1,000, my results would be 1R. Now you can really see how you are doing in regards to risk versus reward. As we talked about before, get those screenshots, mark them up, and then maybe make a little lesson for yourself tomorrow. What would I like to do differently or improve on my trading in tomorrow's session? So feel free to grab this also if you want to create a trading journal for yourself. The key here is your primary success metric, how you determine what success is. It cannot be how much money did I make today. It cannot be. All right. I promise you, you will not be able to be long-term successful in the markets if everything is about how much you made. But if you do want to be successful, your metric must be, did I execute my plan and follow my rules? Okay. That is our real key. So as we finish up, there's a few things I want you to keep in mind. Number 1, here's what we discussed. Prepare for the day, right? There's no guessing involved. There's no randomness for the day. We're decreasing the stress that we're going to have in the future because we've prepared for the day right now. We've made these decisions ahead of time. Okay. It also stops us from having decision fatigue. If you've never heard of that term before, it just means that sometimes making so many decisions, especially right off the cuff, immediately, oh, I have to make a decision. I have to make a decision. Sometimes making those decisions can tire you out, frustrate you so much that your body just kind of gives up and you stop making those decisions. And that's when we just start clicking buttons and now we're gambling. Okay. We don't want to gamble. We want to trade. Make sure you are preparing ahead of time for your trading day. Step number 2, follow your rules. If you follow your rules, regardless of what happens, you are a winner at the end of the day. I'm going to say it again. If you follow your rules, regardless of what happens, win, lose, draw, you are a winner. Okay. There's this thing called negative scar tissue that is very easy to create in the market if you do not follow your rules, especially as we talked about before. If you break a rule and you get money from it, you get rewarded. That creates negative scar tissue that makes it harder for you to follow your rules. Coming from someone who has a lot of negative scar tissue, if you are a beginner, please be very careful with your mind and how you proceed into this, okay? Be really, really careful. I don't want you to create this scar tissue that is going to haunt you for a really long time. It also stops us from taking impulsive trades. Impulsive trades destroy accounts, right? We looked at it before. This is the person with the impulsive trades. They are destroying their account because they don't have a loss stop limit and they also are impulsively trading. We don't want to be that person. Follow your rules. And finally, step number 3, review your progress. Reviewing progress means that you can have confidence in the future, okay? You know what happened. You're not guessing. I promise you guys, if you keep trying to guess and think, oh yeah, I did this and I did that today, your mind, it picks and chooses. It picks and chooses what it wants to remember, okay? We have a very selective memory when it comes to trading in the markets. We don't want to be able to try and remember. We want to see on paper, seeing consistency month after month, journaling progress, finding your flaws, fixing them at the root. That is what is going to become permanent. That is how you are not going to create that negative scar tissue. You are going to create the basis for a solid future in the market. Prepare for the day, follow your rules, review your progress. Thank you so much for joining me today in this episode 9. I hope you're enjoying it. If so, please feel free to like and subscribe, and I'll see you in the next episode.